Welcome once again. I just started recording it and I just realized. Okay, Q&A on the stock market. My name is Arenze Michael and I'm going to be the host for today's class. Like I said earlier on, this is being organized by our financial platform by name Growtechnic Investment Group. Is a platform where we empower people to become financially free. So what's the stock market? I'll give an overview of what the stock market is all about, and then I'll start taking your questions one after the other, if that's okay by us. So what's the stock market? The stock market is also known as equity market. Some of us in our question, we asked, what is stock and shares the same thing? Yes, they are the same thing. And in the course of my brief introduction, I might answer some of the questions you asked and while filling the form. So just bear that in mind. So we might not go over it again. So what's the stock market? It's simple. The stock market is a way whereby a company or a business try to raise up funds to take their business to another level. I'm going to be using a layman term here. I'm going to be using more of layman terminology so that each and every one of us can understand. When you join the group, you understand better, like some other things. For now, my aim is to ensure that each and every one of us really understand what we are doing today. So the stock market, like I was trying to say, it's an avenue whereby businesses or companies tend to raise up funds to move their business or their company to another height. How does this work? Let's take for instance, let's say I'm a business owner or I'm the CEO of a company. I started the company 5 years ago, and the company has been experiencing growth, and there is now increase in demand for the goods or for the commodity or for the services of that company. So the growth or the demand gets to a point whereby the company or my company might not be able to supply enough of that service, commodity, goods, whatsoever we are offering to the general public to meet their demand. So what happens is, as a company or as a business, I've got two options. I can either go to the bank to ask them for loan and then finance my business to increase my production to meet up with the demands in the market for my commodity or goods. Or I can decide to go public, which is called in the stock market, it's called IPO. IPO simply stands for Initial Public Offering. It's a one-time event whereby a company goes from private to public. What does that mean? When I mean private, it means they don't really care much about the public. When I say care in this term, it doesn't mean they don't regard their customers and all of that. However, instead, I mean their business or their company is run privately. They don't need to give out some certain information to the public. You can barely access some information about that company publicly. However, when they go public, almost all their operation goes public, from their board of directors meeting, from their financial report, to their new developments, to their plans, to their product releases, to their legal filings. Every single thing about the business goes public. So that's what it means to, go public in terms of the stock market. So they do that to enable them raise money to finance their business. Let's say what they need is about $2 million to do a certain thing in the business at a particular point in time. They go public and they sell part of their company to the public. When they sell part of their company to the public, they raise money to finance whatsoever thing they intend to do. So by so doing, they solve their problem, and then you, on the other hand, that is financing them, we also get to gain profit if they do well. We're going to come to how you can make money in the stock market. So that's like a kind of a brief overview of the stock market. It's all about buying and selling of buying and selling shares of a company or a business that's just going public. Please, as you are coming in, mute your mic, please. I will not have the time to look at that place. If you're just coming in, try to mute your mic, all right? So as I was trying to say, they use this avenue to raise up funds for themselves to finance their business. Let's give another scenario whereby a company is just going public for the first time and they are issuing 1,000 shares to the public. So when I mean share, I mean stock. It's still the same thing. I can also use equity, but I'm going to be sticking to stock or shares for the purpose of this class. So in case you hear me say stock and then share, they are the same thing. They are the same. They represent the same meaning. So let's say they are issuing 1,000 stock at their IPO, which is their initial public offering. And for each share, they decide, because there's a body, there's a regulation which is known as SEC, Security and Exchange Commission. They are in charge of handling all of these filings and the rest of them. So they decide how much a particular share of a company that intends to go public will be worth. Let's say, for instance, Facebook. Facebook is already public, but I'm just using it as a case study here. Let's say, for instance, when Facebook wanted to go public, a share of the company costs $100. And then they have 1,000 shares to sell out to the public. So as they are selling out those shares to the public, it means they are selling parts of the company to the public. So for every share you buy of a company, you get a unit of ownership of that company. Are we following? If at any point you are not, please, there is a chat section. You can use it to let me know if you are following or not. I can see this chart, and at the minute, just Prestige is unmuted, so she's going to be taking the questions. If there's any question, also drop it in the chat section. Prestige is going to be handling all the questions. I've unmuted her, so if there's any question, she's going to call my attention and then read it out for me to hear. So as I was saying, for every unit of share of a company you buy, you gain ownership of that company, of a unit of that company. Let's assume Facebook is selling 1,000 share or sold 1,000 share at their initial public offering, and one share was sold at $100. So it means that for the 1,000 share that was sold when they went public, they were able to raise, remember, a particular one share costed 100, one share is at the cost of $100, and then they are selling 1,000 share. What does that mean? It means that by the end of the option, by the end of that sales of the initial shares, they should be able to raise up about 1,000 times 100, that's 100,000, I think. They should be able to raise up $100,000 on their initial public offering. And let's say what they really needed to, move or to operate or to finance a particular part of their business is around $95,000. So you can now see, by the action of they are selling a part of their business or their company to the public, they've been able to raise $100,000, and then they'll use that money to finance their business. And if they keep growing and demand keep increasing, they don't go back to do an IPO. Remember I said an IPO is a one-time event. So there's primary IPO and then there is secondary IPO. Primary IPO is just like, some people, you hear them say primary IPO, some will just say IPO. However, anyone that is being used, know that IPO refers most time to the initial stage or the initial time the company went public. Then when you get secondary IPO, it connotes the subsequent, because a particular company might raise up $100,000 at the initial public offering, and over time they might want to expand further, so they can't do an initial public offering again. Instead, what they do is a secondary IPO. Secondary IPO still have the same analogy with the primary IPO. The only difference is that this is second time, or the subsequent times they will be doing that. So that's just like the difference between primary IPO and secondary IPO. So at the secondary IPO, they tend to sell more units or more ownership or more stock of their company to enable them generate more funds to finance their business activity. So that's just like an overview of the stock market, how it works and all of that. So I'm going to be taking the questions now to see how far we can go, so I don't shoot out of point. I just want to ensure I remain at the basic level, because we all need to understand the basics for us to able to advance further. Excuse me, to enable us advance further in the stock market. So I'm going to be going straight to your questions. From what I've explained so far, if anything is not clear to you, can you kindly use the chat section? And Prestige is unmuted, so she's going to pick the questions and then read it out to me, and I'll answer it appropriately. From there, we take other questions. Prestige, are you there? If she's not online, I will mute someone else to do that for me, because we don't really have so much time. Unfortunately, she's the only one with the question. Chooks, are you there? Let me know in the comment section.
Hello?
Yeah,
hello.
Okay.
Okay. I didn't get it right at first. Can you all hear me now?
Yeah, I think I can hear you, so they should be able to hear you as well.
Oh, okay. I'll go straight to the questions.
Yeah. And first, is there anyone that has a question related to the thing I just explained now, like the kind of overview I gave about the stock market? If there is none, then I think, Prestige, you can go on.
Okay. The first question says, what is stock investment all about? How do I begin?
Okay. The first part of that question, I think I've answered it. What stock market all about? Stock market is just about, is a way whereby companies go public to enable them finance their business operation. It's just all about raising money it's just all about the company raising money to enable them finance their business activity and take them to another level. I hope that's clear enough.
Yes, sir. Then the person asked, how do I begin?
How do you begin? First, what I usually tell people The first step to start anything when it comes to investment is to get knowledge. Knowledge is the first step if you want to begin anything in life, whatsoever it is, outside stock market now. For everything you want to start out in life, it's good you get knowledge. The time you spend getting knowledge will reduce the time and the friction you will experience in the journey to getting that thing you want to. So the best way to start is by getting knowledge. After you've got it, you might not have all the knowledge, but you should be able to understand what that thing is about. For instance, yesterday, a friend of mine was trying to introduce an investment to me. Trying to remember the name he called it. He said it's Coolian. I can remember. It's like a cryptocurrency regulated. They are like a bank, but for cryptocurrency. So after explaining, he sent me video. I watched the video. I still was not very clear, though he told me the interest, like you can make as high as 17% return on investment monthly. As someone that's me, as being me, I'm not really moved by how much I can make. I want to first of all understand what I am going through, because Robert Kiyosaki said investment is not risky. What's risky is the investor. And what makes you as an investor risky is when you don't have enough knowledge of what you are going into. So the first step is to get knowledge. After you've gotten knowledge, take baby step. Yesterday in the group, we were reviewing one of our books and we talked about taking baby step. All the details might not be very clear to you, but the foundational information you have, you should be able to act on those information first. So you take baby step. What's the next thing? After taking baby step, then you keep increasing your knowledge. And when I talk about when I say baby step, what I mean is, for instance, for the stock market, I expect us after this class, because the class is not going in details, I expect us to go further to read, because you have a basic understanding. So I expect us to, one, read more, two, attend further classes to get deeper understanding, three, register with a stockbroker, even if you don't have money to start investing, four, if you have some money to invest, you put a little amount, even if it's $10, $15, $20, just a little amount that you know, because if you're a Christian, permit me to say, the Bible said that where the treasure of a man is, that's where the heart lies. So there's this correlation between money and attention. Once your money is involved in something, automatically your attention is gotten into that thing. You see yourself, you start being drawn towards that thing, and you keep want to know more about it. So don't wait until you get the whole knowledge. The first thing to do, or the first step to take, or the best way to start, is to get the knowledge, which is part of what you are doing now. The second stage, take baby step by registering with a broker. If you've got some spare money, fund your account and then buy a stock. All right. I hope I've been able to answer that particular question. Prestige, hold on, I'm seeing a question here.
Okay, I was about
said,
to read it out.
Okay, I can see it. Amidike asks, your last explanation on stock was not clear. The IBO is not IB, is P. P for Portugal, P for Paris, not B. The IPOs, if I got it right, because your voice was not clear. So what I mean by IPO, it stands for Initial Public Offering. It's an event whereby a company or a business takes their business public. They give ownership of their business. They give ownership of their business to the public so that they can raise up funds to finance their business activity. So it's just an event whereby a company goes public to enable them raise up funds to finance their business activities. All right. So I hope that's clear enough for you now. If it's still not clear, let me know. Okay, Prestige, next question, please.
Okay, the next question says, what are the benefits of investing in the stock market?
Okay, when you talk about the benefit of investing in the stock market, the truth and the gospel truth remains why we go into the stock market is to make money. Yeah, that's the primary objective. That's the primary reason. I must be honest with you. It's an investment. So we all go to invest into something to make profit, to make returns from that thing. So that's the primary benefit. Then the secondary benefit is you increase your knowledge, because once you go into the stock market, there is so much. When I mean so much, it's a vast field of learning. So there's so much to learn. So the other benefit, you tend to know more. Another thing is you tend to understand how company work. You tend to understand company structure. You tend to understand, for instance, most of us use Apple phone, but we don't know like how they run their business. We don't even know what Apple company as a whole stands for. We don't even know, who is the CEO. If I should ask now for all of us using Zoom, who is the CEO of Zoom? 99% of us might not even know the answer. But when you start investing in the stock market, you start getting interested in some of these things that might not seem, very like important to you. So that's the other benefit of it. The next benefit is your opportunity increases. What do I mean by that? Like, you are able to seize more opportunities. You are able to, from the understanding and from the knowledge you've gathered, you are able to, some of these things are correlated. You can use the knowledge in this to apply in the other part. For instance, I'm a forex trader. I trade forex, and now I'm a stock investor. And there is a very big correlation between the stock market and the forex trading, because why we exchange, for instance, some of you exchange money from pounds to naira, from dollars to naira, from naira to pounds, and vice versa. Why you do that is to enable you do some transaction in the country in which you are buying their currency. So what's the forex market about? Is the forex trading is about buying and selling of currency. That's a class for another day, which is beyond the scope of this class. But just to help you understand that it increases your opportunity. So if you want to move to the if you want to move to forex trading, it makes it easier for you because you've gotten some knowledge about the stock market, which you can apply in the forex market or in forex trading. I hope that's clear enough. Amidike said it's clear now. Awesome. Okay. Please let me know in the comment section, in the chat box. I really want to be sure each and every one of us is following everything I'm explaining. If there's nothing clear, also use the chat box for me. Thank you. Okay, Prestige, the next question, please.
Okay, so the next one says, how reliable is the stock market?
Sorry, I didn't get that.
The next question says, how reliable is this stock marketing?
Yeah, the stock market is as reliable as every country. What do I mean? Though some people will tell you that the stock market cannot fail, it's very reliable. Also, you should understand that, for instance, in our investment group, we classified it as a medium to high risk investment. A medium to high risk investment. When it comes to investment, we try to rate every investment from low, medium, and high risk. The stock market is a medium to high risk. Why do we say so? Because you can lose your money as fast as you can make more money. However, when it comes to reliability, it's different. So there's a difference between reliability and riskiness. So reliability, the stock market is 100% reliable as long as that stock of the country you are buying or the company where the stock market is still exists. As long as the economy of every country exists, the stock market will always exist. So it's as reliable as even the banking system. So I can comfortably put them side to side. So if the banking, you feel more comfortable with the banking system, you should also feel more comfortable with the stock market. However, you should understand that reliability is different from riskiness. So the stock market is medium to high risk investment. However, it's a very reliable platform to invest in. Hope that's clear. Okay, Paul Adeleke is asking, which country is best to invest in their companies? Well, like I said, every company has got their own shares, like depending on the company where depending on the country where the company is founded or the primary country of that company, you can actually invest in any country's company, any company in any country, so long as they are so long as they've gone public. Okay, let me take time to explain something now. Because the truth is that the stock in Japan, you might not be able to access it except they've gone public. And for them to go public, they are like a board, there's a body that regulates their operation. So there's a body that regulates everything they do. There's a body that regulates how they operate and all of that. So long as they've gone public, so it's safe to invest in any country's company. But you should also have in mind that what differs is the volatility of that company. What differs is the volatility of that company. So you might not be able to, the company might be very volatile in the sense that the price movement goes up and down very, very fast. So have that at the back of your mind. All right. So you can actually invest, but majorly we normally invest in companies that are in US and the UK. US and the UK, they are the mostly traded companies. So I hope that's clear. He said you've not answered Pat's question. Which of the question, please? Can you come attention to?
Okay, he said, he asked, what are penny stock? Oh. He said, what are penny stock? Yes.
Oh, okay.
That are they the same? Yeah.
Penny stock is just like another terminology in the stock market that means micro cap stock. So when it comes to the stock, there is micro stock and macro. So it's just about the size of that company. And there is what is called the weighting system in the stock market, whereby you use to categorize which company is big. So it's just about the size of a company, whether the company is big or the company is small. And one of the major weighting system that's used is the price weighting system or the capital weighting system. Was about they trying to put a price cap over a company. For instance, some school of thought will say any company that is valued below $2 billion is a penny stock or is a micro stock or is a small cap stock. And any company that is valued above $2 billion is a macro or a blue chip stock. Hope we are following. Are we following?
Yes, sir.
Okay, so that's it. A penny stock is just a simple terminology that talks about the size of a particular stock you are buying. Some stocks are large cap, some are small cap. So it's just a terminology that says this one is big and this one is small. All right. So I hope that answers that question. Okay, next question, please.
The next one says, how can I make money via stock?
Okay, so I'll take it together with this question from Pat. Please, if you are just joining us, can you kindly mute your mic? I'll take it in combination with the question Pat is asking. He's asking, can the value of a share drop over time, say over 25 years, below the initial value of price? Yes, it can. Also, just a quick announcement. In case this meeting, in case Zoom ends this meeting, can you quickly rejoin? Sorry for that, please. Just in case. So he's asking, can the value of a share drop over time, say over 25 years, below the initial value of price? Yes, it can. Like I say, this company, when they go public, they source the fund from the public to finance the activity. Let's say they don't do well, they did not manage the company very well. The company's value tends to drop over time. And when it drops, the value of your money invested in that company is dropping. But when they do well, the value of your money is growing. So that's also answering the person's question, asking how you make money from the stock market. There are two ways of making money from the stock market. One, either buying dividend-paying shares. What do I mean by dividend-paying share? Dividend-paying shares are shares that dividend is a terminology that is still the same thing as interest. When you save money in the bank pays you interest. So in the stock market, that interest is known as dividend. So when you save more, when you buy a stock or a share of a company that pays dividend, you get to pay dividend either quarterly, biannually, or annually. So that's one way of making money in the stock market, by buying companies that pays dividend. And I know you might want to ask, how do you know companies that pays dividend? And when you register with a stockbroker, that information will be displayed to you if they pay dividend or not. So you see it that they pay dividend, and you see the percentage of the dividend that they will pay you if they do well. So the other way of making money from the stock market, is by value appreciation or by growth appreciation. When the company you bought, let's say for instance, you bought Facebook shares at 20 naira or at $20. Let's say you bought Facebook shares at $20. So over the course of 2 or 3 months, the price or the value of Facebook, rises up to a particular amount. Let's say it rises up to $25 or $30. So it means that the value of your money you invested in Facebook has also grown from $20 to $25 or $30, depending on the performance of Facebook over the space of that time. So that's another way you make money from the stock market. You buy, you hold, and then if the company performs well over time, the value of the company increases, so as the money you invested in that company increases. So there's a deeper explanation which I might not go into because some of us might not understand it. However, but that's the two basic way you make money from the stock market. Either you buy a stock that pays dividend, or you buy a stock that performs well over time and their value increases. For instance, one of the stock I bought last month is 17% up. What do I mean by that? It has grown, excuse me, the value has grown by 17%. So let's say I invested $1,000 in that company. So it means that by today, or as I'm speaking to you, that $1,000 has appreciated 17% times. So 17% of $1,000 should be about $170. So I would have made $170 within the space of a month. So that's it. So that's another way of making money from the stock market. I hope that's understandable. All right. Okay, someone here is asking, sorry, Prestige, let me quickly take this question. Paul is asking, how easy is it to register with a stockbroker in another country and invest in the shares of company from that particular country? Just thinking. I've made a video, I'll share the link. If you registered for this class, I'll share the YouTube link to the video. There is a particular broker we use. You can actually register with a foreign broker, though some of them don't allow you. For instance, depending on your country, some people are from Cameroon here, some are from Nigeria, some reside in UK, some in US. So depending on your country of residence, you should understand that some stockbroker don't allow you access to their platform, while others do. For us in the Growtechnic Investment Group, the one we recommend and the one we use is the Trading 212. Fortunately enough, it allows access to people both in UK and outside UK. For those outside UK in Nigeria, so you need to have, I think, a MasterCard or a dollar card to enable you fund the account. So yes, Paul, you can, it's easy. You just need to fill in the details there. And I also made a video showing you the step-by-step process on how to register with Trading 212 stock broker. So later on, we're going to send out an email, or if you are in the group, you should have access to that already. So you can go back to watch the setup video for your Trading 212. Okay, I hope I've answered your question, Paul. Prestige, over to you. The next question, please.
Okay.